our industry is getting a lot of column inches in the press at the moment. In fact, probably for the last 6 months, barely a day goes by where there's not a front page of the Fin or the Oz grappling with some complicated issue to do with energy. So spend a little bit of time on that and how that impacts ERM's business. What are the opportunities and threats that come with that, and then spend a couple of minutes on what our numbers are looking like, and then we'll open up for questions. So firstly, on the market issues, look, the missing that has been missing for a very long time is enduring national energy policy in this country. The federal government has focused on environmental policy alone, which has led to a whole lot of changes in our energy system, primarily the implementation of renewables, which in itself is not a bad thing, but it has led to substantial increase in price. We have also seen, because of the lack of enduring national policy, the states start to pull away and go their own way, introducing their own state-level policies, which has only exacerbated the issues at hand. What does that mean for ERM Power? Well, first, we've seen quite a large increase in the underlying wholesale market prices. Now, the average person on the street did not understand the level of volatility that exists in wholesale energy price. They thought it was a utility service, often regulated. They felt it was government owned, and therefore prices would stay fairly stable. Now, that has not been the case. Now, for ERM itself, that's not a big deal. We do have peaking generation, but our job is to manage the volatility of the wholesale market on behalf of our customers. We give our customers a fixed unit price over a period of time, and so we hedge that out in the forward market. So losing market liquidity in the forward market is a risk. That has not happened. Really, what we end up doing is just passing on a higher underlying price to customers. Big issue, though, for the customers, we ran some sample models where basically we took an average commercial and industrial customer load. We looked at it in 2015 if we'd priced a one-year contract. This is excluding network charges, so this is just the volatile commodity, just the green energy certificates and the energy. If we priced that for a customer in New South Wales, starting 1st of April 2015 for a year, we would have offered them $50 a megawatt hour. Today, we're offering them $126 a megawatt hour. Queensland, 62 to 128, and these were numbers that were about 6 or 8 weeks ago. You'll find that Queensland number is way up on that 128. But you can see at least 150% increases that the average customer, and that's all commercial and industrial across Australia, is receiving today. This is a very, very painful thing. Now, if we talk, but a great thing, because a year ago, this problem existed, but the government, all they heard about was noise from the industry saying, we think there is a big problem coming. Today, government are hearing it from businesses, that this is an economic issue Australia-wide, hurting the competitiveness of businesses. And as governments tend to do, if there's a vote in it, they start to pay attention. The good news is we have seen a marked shift in sentiment from the government, where they've said it's not just about sustainability, it's also about affordability and security. That's a great start. They've appointed the Chief Scientist, Alan Finkel, to run a review, which will come up with some recommendations due this quarter, And that will start to see, hopefully, the bones of some national policy which is going to help us through this. But between now and then, if you're a business customer, the first thing is you're worried about your energy costs. You used to think that this was a commodity that the procurement guys would deal with. You now understand that in part of your business strategy, you need to be thinking about investing in your consumption. And a little bit about ERM Power in that space. For the 6th year in a row, we have been named the #1 supplier in terms of customer satisfaction in commercial and industrial. We have that position because we provide accurate bills, we provide information to customers about their consumption. We have been investing in an energy solutions business, which will start to show fruit over the next couple of years. And we think that the sentiment in the market is really turning towards us as customers really have to take control of their energy consumption, knowing that there's no short-term fix coming from the government policy. Just touch a little bit about the market. Two columns, our outlook at the start of the year and our outlook at the half year. I'm not going to go into the details of our half year results. That's now sort of 6 or 8 weeks old, but touch on a few things. In our Australian retail business, we are going to meet our volume numbers. So that's the revenue proxy, if you like, the amount of energy that we deliver to our customers. We're going to do it at a better margin than we expected at the start of the year. There's a few factors around that, but one of which was that we were dealing with a counterparty that had gone into receivership, which had suppressed our numbers, and they actually came out of administration last week, which has flowed back into our numbers. So that was quite good news. Our US retail business, a business called Source Power and Gas, which we purchased about 2 years ago. The rationale there was that we would invest in that business around the commercial and industrial marketplace, put in new people, process and technology consistent with the sort of ERM proposition around consumption information and data-rich offerings, and we would grow that. We've doubled it in the first year, and we're going to double again in the second year. When we bought that company, it had a small residential component, which was sort of less than 20% of the business, and we divested that last week for $11 million US, so less than 20% of the business 2 years later, and that actually we got a higher sale price than the original investment in the company 2 years ago. So that was a nice result for us. We had predicted at the start of the year gross margins between $8 and $8.50 a megawatt hour. We've tempered that to about $7.50. Some of that is the mix as we exit the residential business, but some of it is in that high growth environment where we're acquiring a lot of customers. We haven't been able to deliver the gross margins that we would like. We've still improved the gross margins quite a bit year over year, so we're pretty bullish about the way that business is going. Our Oki generation business is on track to meet its numbers. That one's really for people like Nathan who really understand the volatility in the wholesale market and therefore have sometimes concerns and sometimes a little bit of overexcitement about your ability to overachieve or underachieve those numbers. So we wanted to make it clear we're on track for that. And we have increased our investment in our energy solutions business. As I said, we've seen the market coming towards that, and we want to accelerate that a little bit.